I'm quite happy to welcome today Mr. Richard Halle, Fund Manager of the MNG European Strategic Value Fund. Welcome.
Good to be here, Peter.
Thanks. A lot of people like value investing, but the last years the performance wasn't so good compared to the growth stocks. So why should people invest in value stocks?
I think part of the answer is because value has done so badly relative to growth for so long that there actually aren't many people who like value investing anymore. Mm-hmm. And also the consequence of that long-term underperformance has led to a very dramatic divergence in valuations between growth and value, which gives us a great opportunity. The other thing which is extremely important is we have undergone a big regime shift over the last couple of years, and that is starting to see different stocks doing well compared to what did well in the previous decade. And the best example is European banks who've outperformed the Nasdaq over the last 3 years. Very few people realize that these sorts of things are going on in the market.
Mm-hmm. Could you explain the value strategy of your fund?
Yeah, well, I'm having to educate clients about what value means and the different types of value strategies. We call our value strategy patient value. We don't have a momentum overlay. We don't have a high conviction overlay. We run good diversified funds, which seems to work. And fortunately, our investors haven't had to be too patient for their returns over the last 16 years I've been running the fund.
Mm-hmm. And which sectors and regions are most attractive now for you as an investor?
Because of that very wide divergence between growth and valuations, there's opportunities all across the market, except for information technology. But the most exciting areas for us are banks. We were underweight banks for 9 years on this fund, and we now see a lot of opportunity in European banks. Energy stocks as well. And then we also see good opportunities in the UK, where valuations are extremely depressed, and starting to see valuations in France now, given what happened over the weekend.
And could you explain your portfolio, what main focuses you have?
Yeah, I mean, what we always try and do is create a well-diversified portfolio that gives good risk-adjusted returns for the investors, for the clients. And we feel that we've been able to do that now with that very good opportunity set that we see out there. And I think probably the most interesting characteristic of the fund at the moment is even though European equities have performed very well and the fund has performed well, the fund is still on less than 10 times price-earnings ratio, which we think is really exciting.
Exciting is a good answer because a lot of investors are expecting performance. So what kind of performance the fund has in the past?
So yes, it's always been a little bit uncomfortable trying to sell a European value fund, because European equities have not been viewed as a good asset class, and value within that has not been great. But we're very pleased. Over the last 3 and last 5 years, we have produced very good double-digit returns for our investors over that period. What that will be in the future is a more important question. We don't know, of course, but buying a fund on less than 10 times earnings gives you a really good opportunity to enjoy good returns going forward. Certainly, I think, much better than trying to buy a S&P 500 ETF on over 20 times earnings.
And how long should investors stick at least on your fund?
We can show you 16 years of data of what we've done under a global financial crisis, a pandemic, the euro breaking up, all these sorts of things going on. And I think we've built up a reasonable track record to show that we can A, outperform the market, and B, are reasonably good in helping to protect downside when things happen. So we think this is a really good core holding for European investors who should be invested in equities because it's a great asset class over the long term.
Mr. Halle, thanks a lot for coming and answering the question. It was very interesting, and good luck picking up the right stocks.
Thank you, it's a pleasure being here.